Hi guys, hope everyone's doing well. It's been a while. Back again with another video. I've had some requests to sort of do some more videos of trade recaps. So let's go for today. Today's a good example how to use the VIX and gamma levels to add extra confidence to your trades. So starting off, if we just look at the profile, so you can see what's kind of happened over the last week. So we had that massive sell-off price, then for the last week had this large sort of balanced range, then coming into the latter end of last week and this week we then broken out of that range, created a new range above this old range. So you can see here we had these highs put in, broke through, and now price is sort of holding out, slowly chopping around, but now we're sort of holding out this level here. So coming into the RTH session, so we had this big sell-off following the SMB rates decision and their version of basically FOMC, the Swiss National Bank. So we had that sell-off. So now as we're coming in to the open, the RTH open, we're coming into this volume distribution edge here. So as you guys know, I like to trade these edges. I like to play these distributions as balance areas and trade off them. So we either play inside, retest, come lower, or break, retest the highs, go higher. So as we already had a 300 odd point drop, right, I wasn't expecting us to continue further. There was no major news release, so I was expecting this strong area of volume here to hold and not break down further. And also, if you see the sort of weekly VWAP, I'll show you the weekly. There's nothing really on the monthly. Monthly was still sort of back inside monthly value, back inside rotation. So weekly VWAP, you can see exactly what I was saying here in the previous thing. So we had one balance here, balance on, so we're now having another balance. So we come back in, as you can see here, we had this rejection of weekly value area low, developing value area low. So this is your one standard deviation point. So that's basically your weekly value low, value high. These are the extremes. So yeah, we're coming into this. I was expecting a reaction from here. This wasn't my trade location to take a short long from. I'll tell you why. Because now looking at this Globex profile, you can see we've got this balance range here, right? The reason why I didn't want to take a long from here is because it's very possible we would sweep these. It was probable that we could sweep those equal highs and come back, continue short. Not necessarily all the way down, but we could have come back, maybe swept the lows, maybe come into this point of control, then maybe made our way up. That is something that could have happened. So for me to be on the safe side, what I need to see, so you're just going to play this like a standard rotation, right? So price comes in, you're expecting either this to happen, or price will auction up, it will take those highs and it will retest the edge of that distribution there. And that is where you want to take your long trade. You can take longs from here. This is your first location and this is your second location. So I wanted to be on the safe side, so I was waiting for that break, retest, go higher. Hopefully that makes sense, because you've got this huge distribution here. So you just kind of play that as a rotation itself, if that makes sense. Hopefully you guys know now how I play these rotations. I'll just do it for those that don't know. So here, if you have like a sort of balance where price is doing this, you have these distribution high, distribution low, where there's usually like a low volume node here. So I like to play these rotations where if price is inside, I'll look to test the extremes, take a long position from here, or if we're here, take a short position there. On the flip side, if we're trading here, come down, second option, break inside, retest the edge, go higher. Same thing for the flip side. Hopefully that makes sense. So yeah, so weekly wise, we're still rotational, so I'm still looking for rotational trades, not really anything crazy on the trend side. I'll show you the VIX quickly. So VIX is obviously something that inversely correlates with NQ and ES. So the basic idea is if VIX is going up, NQ is going to go down. So you can see how this is actually a mirror image on the flip side. So here you can see pre-market, we had this M pattern, and then market opens, we complete the M pattern. Here you can see, right, we get the W pattern on, I hate using these terms by the way, but it's just, yeah, just visualize it, right? Here you have this W sort of price action, and here you have the M, right? So here, VIX is how I look at this. I can say, right, so here we've got a distribution. So how you identify these distributions are these ranges. So you have a high put in here, put in a low, respected that low, high again, low again. Now it breaks. Now when it breaks, it causes this imbalance formed by this low volume node. Now price comes up to this low volume node where the point of control is, rejects, comes back up. So as I said, if I'm looking to go long, I want to see VIX pop. I saw VIX pop all the way down. So this is my confirmation, right, to look for long trades. So now if I just show you sort of order flow really quick. So here you can see right at the market open, we come down into this low. Here you can see the massive absorption here. Huge sellers not going anywhere, which means these are passive buyers sitting in here. And look how auction market theory works out here. We had this range, price broke the range, retested that high to the pip, right? And that was my entry. Off we go, right? Plain and simple auction market theory here. You have a balanced range, create the distribution edge, break, retest, go long. Simply what I was doing today. Really trying to make this as simple as I can. If you look at the footprint, I'll just show you some sort of in-depth stuff even more. So we had that, you could even see the absorption here, so you can see the high sell side here, 292 delta, 290, but such a small range, huge absorption. Here you can see the 180 lots offside, comes up. Now as we come up, this is where you can see aggressive buying, 115, right, buyers carrying it higher. Now as we came into this area to break and retest, you can see here a lot of this sell side delta not going anywhere, sellers trapped at the lows. Here you can see multiple, these pink numbers are the imbalances at 300%. So you had a lot of aggressive selling not going anywhere there, getting absorbed by buyers. So as soon as I saw this, I entered. I'll just show you my entry. Hold on a second. MNQ 675. 1 minute chart. Alright, so here you can see my entry there. So I entered at 869, closed at 973. So just over 100 points. That was where we had that sort of pullback aggressive selling. That was where I closed out. So I closed out at the other side of value. I'll just show you. Right, so I was come inside daily value, so I just took it off there at the 2000s at the other side of value. Also, I'll show you these sort of gamma levels. So we've come into this area here where you can see, this is why I told you I didn't want to sell off if we broke through, because we're coming into these 1 day max. So these are QQQ levels. So I use a platform that converts these QQQ levels using a standard ratio. So we came into this high volume node ODTE level and also this GEX level. So once I saw that break above here, I can see these levels are holding and I can ride my trade long. So yeah, I just kind of use that as extra confidence. But that's it for today, guys. Hopefully everything makes sense. Take care, guys. See you soon.